Recently, somebody asked me if I only had $1,000 to invest in the current market, how would I invest it? With just $1,000, I definitely would not be doing the exact same strategy that I am today. I would probably mix in some much riskier and out-of-the-box strategies to grow my wealth, including some very controversial plays that I'm sure some people would definitely disagree with. Today, I'm going to share exactly what I'd do if I only had $1,000 to invest, the projects I'd invest in, and some of the more controversial and out-of-the-box plays that I would make. Okay, if I only had $1,000 to invest, the first thing I'd do is spend all 100% of it on ETH. Now, this might seem like it's about to be a really short video, but I promise this is not what it seems. Next, I would bridge all that ETH over to Arbitrum, and then I would swap the majority of my ETH into stables and then swap those stables back into ETH. I think some of you guys have maybe caught on to the plan here, but probably not everyone yet. Then I would spend $100 of my $1,000 to buy GMX and stake it on the GMX platform. I would then go to treasure.lol, I would take $50 and I would buy the Magic token. Then I would go to the Bridge World and then go to the Atlas Mine and I would stake that $50 for a 12-month period for a 400% boost. Next, I would go and buy the Arbitrum Odyssey NFT for $5. After that, if I wanted to be like super extra careful, I would go and complete some of the guild tasks on some of these websites and just kind of go through the list and see which ones I could accomplish relatively easily. If you haven't figured out yet, I would do all of these things for one purpose, and that would be to farm the Arbitrum airdrop, which the payout or ROI from some of these airdrops is absolutely insane. We saw with the Optimism airdrop, some people made $1,000 to $10,000 to $50,000 from that airdrop. So for me, with only $1,000, it's definitely worth doing all these things to potentially net an ROI of $1,000 to $5,000 to $10,000. And although this isn't me directly investing in very much, like I said, the ROI is really, really big for the amount of risk I'm having to take. Now, obviously though, there is no guarantee that we get this airdrop, so I'm gonna go through two different paths forward. One path where we do get the airdrop and everything's amazing and happy, and the other path where we don't get the airdrop and things are a little bit less amazing, but still there's a lot of potential. First up, scenario one, I do get the airdrop. And let's say I get $1,000, I could potentially get more, but let's say for the purpose of this scenario, I just get $1,000. From here, I would keep both my GMX position and my Magic position as they are. I wouldn't touch those, I would leave those and let those run. I would also keep about 75% of my Arbitrum tokens. Arbitrum is a great platform, and in my opinion, another great play. I'd then sell the other 25% of ARB tokens into stables. So then we'd have $100 in GMX, $50 in Magic. Let's say we lost $20 in fees and other things, so $830 in ETH, $750 in ARB token, and $250 in stables. So that leaves us with $1,080 in capital we can go out and invest with, but we also now have these positions in Arbitrum, we have positions in GMX, Magic, and ETH that we're already invested in and, you know, hopefully gonna make money with. So now I would probably take $100 of my $1,080 and go out and buy some Cake. Cake, in my opinion, is a massively underrated token. PancakeSwap did 304 million in volume in the last 30 days and had 1.9 million active users. The platform token is the Cake token, and PancakeSwap is one of the few platforms that pays users a share of the platform fees coming from real yield via the Cake token. And they do this in a roundabout way via burns. Pretty much any action taken on the PancakeSwap platform results in Cake tokens being burned. If you don't know what it means to burn a token, it just means that essentially they're taking the token and deleting it. That's not exactly how it works, but for the purpose of you understanding it, they're taking all these Cake tokens from the supply, from circulation, and then they're deleting them so that there's less in circulation and so that the supply doesn't get out of control. They also recently added fixed term staking, meaning users can go and lock Cake to earn higher rewards. This is bullish because it means more and more of the supply of Cake gets locked up over time. On top of both of these things, Cake recently announced a hard cap for the Cake token, with an end goal of eventually becoming deflationary. The market cap for Cake is currently only 600 million, with 300 million in trading volume and a token that shares fees via burns and the Cake pool. Compare that to Uniswap with a market cap of 5 billion and a token that has no fee sharing and a volume of 976 million a month. Uniswap only has 3 times the trading volume but is valued 8 times higher than PancakeSwap is. PancakeSwap recently also started going multi-chain, adding Ethereum. I would take my Cake and stake it in the Cake pool with a 1-year lock for the highest yield. And that leaves us with $980. From here, I would take another $100 and I would stick it into Sphere. And before I go any further, just a quick disclosure on Sphere, I hold personally a lot of Sphere. I've become close friends with Sim, which he's the lead developer of Sphere, as well as Obsidian, the business I started, did KYC for Sphere. So obviously, I'm definitely not unbiased. Still, I am trying to be neutral, and I did try to think this through of like, what would I genuinely do if I only had $1,000? This is what I would genuinely do. This is the plan that I would execute here. Sphere is a meta governance token. They build other protocols with separate tokens and ecosystems that all pay fees back into Sphere. And those other protocols that Sphere builds are set up in a way that they collect tokens from even other projects outside of the Sphere ecosystem, with the end goal being that Sphere's treasury becomes a massive holder of a range of different projects' governance tokens. Sphere's market cap is currently at 38 million, and they hold 24 million in assets, meaning they're closely valued to their treasury value, leaving a lot of potential for upside. They've so far built an impressive amount in less than a year of their existence and proven they're able to deliver on their ambitious building timelines. And currently, here's what they have in development. Dyson, an automated strategy platform where anyone could easily automate and jump into extremely complex strategies, usually reserved for more technical players. This platform pays fees into Sphere and will be the first external Sphere-made product that will actually utilize the Sphere token as its platform token. They also have coming out Prion, a lending protocol and stablecoin with zero interest leveraging. VE Sphere, a massive upgrade to the way that Sphere's tokenomics work. It basically allows long-term locking of Sphere tokens, and in exchange, you get paid out all these rewards in various tokens collected by Sphere's treasury. They have Covenant, a bribe marketplace for governance. If you're not familiar with the Curve Wars, then that might not make sense, but if you are familiar with the Curve Wars, then you understand what that is. And about 15 other protocols in the works, ranging from stablecoins to loans to optimizers for their existing suite of protocols. You can see why I'm excited about the future, and although nothing's certain, I would personally include this as a part of my strategy, but I'd also anticipate the possibility that I could lose 100% of my investment into this thing because low cap crypto projects are extremely risky. And that leaves us with $880. And I would stick another $100 into Olympus DAO. They've been building nonstop since the bull market and made radical changes most people aren't aware of, including reducing their staking yield, which was once like 100,000%, down to just 7.4%. Their current treasury sits at 265 million and their liquidity at almost 70 million. And this is the crazy part to me, their market cap is only $251 million, meaning they hold more in liquid assets than the market actually values them as. There are very few other crypto projects that you could say the same for. Their token price, tracked by Geom, has remained pretty stable since May, basically staying around 2,000. There's a lot that I could go into with Ohm. There's a lot that they've done in the past 6 months, but basically I see a lot of potential in future growth, and I think it's worth allocating $100 to. From there, I'd probably put another $100 into Matic. Matic has been on a tear lately. They keep forming high-profile partnerships with everyone from Instagram to Reddit to JP Morgan, and they just keep building. I'd also put $100 into the Optimism token, as I'm bullish on layer 2 networks like Optimism and Arbitrum, both of which already have a higher total value locked than Solana, and I expect to continue to grow. And from there, I would invest $100 into the Atom token. Again, I could make an entire video about Atom alone, but suffice to say their new 2.0 roadmap is very exciting, and I think interchain security will be a huge catalyst for the Cosmos ecosystem. And at this point, we have 3 relatively low cap tokens, Sphere, Ohm, and Magic, and 7 more blue chip-ish projects with ETH, GMX, Arbitrum, Optimism, Cake, Atom, and Matic. The remaining 480 I would probably split. I would take half of it and I would leave it in ETH just to kind of like preserve it in ETH so that, you know, as the market's going up, hopefully ETH is a leading indicator and, you know, that capital does well. The other half of that capital I would then farm out and I would just leave it there waiting for new opportunities to pop up during the bear market so that I had capital on hand that I could, you know, quickly invest into these opportunities as I saw them. And I actually try to experiment and explore with a ton of different crypto income ideas in my other videos if you're looking for some ideas about how to farm your funds. Now, if I didn't end up getting the Arbitrum airdrop, I would only change a few things. And again, let's say I lost $20 trying to farm the Arbitrum airdrop, buying the NFT and doing transactions and transaction fees. Let's say I lost $20, leaving only $980. I have $100 locked in GMX and I have $50 locked in Magic. I would again still leave my funds in GMX and Magic, and I would do the exact same investments, besides obviously I wouldn't have any funds in Arbitrum because there was no airdrop. And possibly I would reduce some of the position sizes I was jumping in at. So maybe instead of investing 100 in some of those projects, I would invest just 50 in some of those projects. Outside of that, and on another important note, it is really, really difficult to make a life-changing amount of money with just $1,000 to invest. It doesn't mean that you can't or shouldn't invest. It just means that if you're really focused on building wealth, then maybe your focus shouldn't be as much on investing and should be more on building up income streams via side hustles and starting businesses. It's a lot easier to build up wealth investing when you have a solid stream of income coming in. When I did my journey to $1 million, that's how I did it, and I couldn't have hit my goal had I only focused on investing from the get-go. As always, none of this is an investment advice. None of this is me specifically telling you should get into these tokens. This is me responding to the question, what would you do if you only had $1,000 to invest? What would your specific strategy be? The point of me sharing what my specific strategy would be isn't to say, hey, go get into all these exact tokens, but more to show like, hey, look at, I'm focusing on some low cap tokens that are higher risk. I'm focusing on some, lower risk, maybe blue chip tokens, and I'm looking for out of the box strategies like the Arbitrum airdrop to try to increase my wealth. It is my solid belief that the tactics that you use to invest are going to change rapidly. Some tokens are going to be a great investment one day, and a month later they could be a horrible investment because of the way the market changes. But if you focus on the investing fundamentals that are timeless, that's how you build wealth. That's how you grow. As always, if this video is helpful, make sure to hit that like button. If you have any questions or comments, or maybe you think there's some tokens that should have been on this list that weren't, let me know in the comments below. And if you want to see more videos like this, make sure to hit the subscribe button, but you got to also hit the little bell next to it if you want to be notified each time I release a video. Thanks for watching, and I'll see you next week.